Happy Saturday, ladies and gentlemen, all in crypto here, and welcome back, guys, for another jam-packed daily market update. Today, we're going to be talking about something rather specific, and that is a sovereign debt crisis that some analysts believe the US is already going through. It's already begun. And we're going to talk about that because why would we talk about that as a cryptocurrency channel? Well, it's because it's going to affect everybody. When we talk about a debt crisis, we're talking about the very thing that money is backed up by. So we're not on a gold standard or any kind of other standard. We're on a fiat standard. And what that means is that money is backed. Money essentially is an IOU. It comes into existence through debt creation. And the debt that backs that money, if it devalues, it puts a real question mark over the current monetary systems that we have and their sustainability. And this can lead to things like hyperinflation to cover the interest on the debt, so on and so forth. So really the reason I got into crypto or certainly Bitcoin initially, and most people get into Bitcoin, is because they understand the need for a system that isn't the fiat systems. And I don't think Bitcoin is the peer-to-peer payment network, electronic cash network that Satoshi initially envisioned it to be. I think that narrative was hijacked. It's now a store of value. Could you use it as cash? Well, kind of. But I think there's been a real resistance to that. I think it's morphed into more of a store of value. So despite being Saturday and I want everyone to have a chilled weekend, I want to talk about a very serious issue. And that, of course, is the perhaps looming debt crisis. And I am actually perhaps not in the camp of a debt collapse. I'm actually in the alternative camp of debt being, or the debt and fiat systems actually being saved by the cryptocurrency markets, which were actually initially intended to combat it. And we'll talk about that towards the end of the video and what they're going to do with stablecoins. The US and all governments need to adopt cryptocurrencies because it makes the system better, it makes it more efficient, it unlocks liquidity and unplugs sort of bottlenecks all over the system. And we'll talk about that. So I want to kick things off with a video. This is an individual, Lawrence Leopard, talking about owning gold, silver, or Bitcoin due to basically government sort of fiat devaluation. And this is an important video because everybody needs to understand this. One reason we're so zealous on this channel and we do what we do is because I truly believe they say knowledge is power. I partly agree, partly don't. I know so many knowledgeable people that just sit on the sofa and talk about how knowledgeable they are all day. It's not impressive. Knowledge plus action gives you that power. But to understand the system that we live in is of the utmost importance. Let's dive into this clip.
We're in a sovereign debt crisis, and I think we are. And if we're going to have a lot of inflation, I think we do. And if we're going to go to have a monetary reset, there are going to be real winners and losers. And you're not going to get a do-over. You know, you're not going to get a do-over. It's not going to be like, oh gosh, I missed it. Maybe I'll, I mean, it's like we could wake up one day and the government could say, we're going to a gold standard, we're taking the price of gold up to $20,000. Well, you either own gold and gold mining stocks or you don't. They're going to go up enormously. Same thing with Bitcoin. I mean, the U.S. could say we're going to do a strategic Bitcoin reserve and the Bitcoin price could triple. Well, if you don't have any, you don't benefit from that. So there will be, because of the risk of monetary debasement and the fact that there will be no do-over, I would just strongly encourage all of your listeners to have some allocation of their wealth into things that the government can't print. The government can't print gold, government can't print silver, government can't print Bitcoin, and the government can print dollars, and they're going to print a shitload of dollars, in my opinion.
And we agree that the kind of curve of the monetary supply is clearly... I do apologize there, guys. The curve of monetary supply is clearly up and to the right. And if you look at assets, they go with it. If you look at the top 1% of earners, they go with it because they understand the game. And the game is devaluation of the masses through money creation, proliferation, and further indebting nations so that they can impoverish the masses and have them basically controlled through finance, which has been a trick that's been played all the way back. The first kind of historical accounts of perhaps, and even further than that, certainly money manipulation go all the way back to Babylon. And perhaps, there's accounts that sort of center around the Tower of Babel. If you, believe that the Tower of Babel was a thing, there is evidence outside of the Bible to suggest that. I don't want to talk about that. We've got a great guy coming on the show to talk to us about the history of money with a kind of mythological religious references throughout, which is very interesting. But there's two camps really, and I'm not 100% sure what one I'm in. one thing, the one camp I'm definitely in is the fact that they're going to continue to proliferate because it suits an agenda. They want the haves and the have-nots, and they're getting that with just the system as it is. Rich people own assets. Everybody else typically doesn't, right? And that's the equation that we want people to get on the right side of. Own assets. So government can't print stocks. If you can find value stocks or stocks that you think have a real value, and in a world where the things that they're valued in continues to sort of inflate, they're going to do well. And that's why everyone talks about, oh, the stock market's so overvalued. Yeah, relative to the monetary supply. So I'm in a camp of they're going to continue to devalue. I think if you look at what's happening with the debt markets right now, this is TLT, this is 20-year plus year treasuries. I mean, this could easily slip through the floor. In fact, I think there's potentially a likelihood of it. And continue to devalue. Now, that's going to put pressure because what is debt? What are treasuries? The very things that back money up. Or debt is how money comes into creation. It's double counting a system. You get money on the one end to go and get your house, and that goes to the individual, and then the mortgage sits on a balance sheet. And the government is the most indebted. But this could easily continue to fall, which essentially means yields could rise. What you're noticing with yields, and we put an argument out there that actually interest rates in the UK... let's look at the GB10. I'm going to have to switch back to myself. We put an argument forward that actually UK interest rates could be going higher based on the UK government bonds, despite the Bank of England lowering rates, which means that the bonds themselves are devaluing, and actually debt is becoming more expensive to own and losing its value. Now that's an equation that cannot continue and may need government intervention in terms of them adding it to their balance sheet, like what they kind of did the UK in regards to the gilts crisis with Liz Truss, and she got the blame for all that. It had, in my opinion, nothing to do with her. I say nothing. She was a small part of that whole equation. Always saw it with like SVB and things like that. Governments will step in to support the markets. The Treasury, that's one of their main priorities. And that essentially means more money proliferation because they do that through creating more debt and continuing to purchase. And if you look at interest rates or interest payment on this is public debt, I mean, we're $1.1 trillion now in terms of interest rate payments a year. As a percentage of tax receipts, so it's more than defense in the US. As a percentage of tax receipts, this is 35%, only below 1980 and 1999, and above the World War II levels. It's unsustainable, but I'm not necessarily, even though it seems obvious, a debt crisis seems very obvious. Well, maybe they can do something ingenious, like take that debt and turn it into money again, and actually monetize it once again. And they're doing that through stablecoins. I want to play a clip of what took place at Consensus. Charles Hoskinson was heading up a panel with the likes of Eric Trump, Zach Witkoff, Zach Folkman, and Sergey. And I want to listen to what one of the individuals had to say in regards to their world or USD1 and what they're doing. And the Treasury Secretary, Scott Bessent, David Sachs have all said they're going to use stablecoins to increase dollar dominance and lower interest rates. And they're doing that through introducing a purchaser to debt at a time when debt has needed purchasing. And actually, through doing that and introducing stablecoins, you're increasing monetary supply once again through the very thing that's already been used to increase monetary supply once. This is quite high-level stuff, and hopefully I'm kind of simplifying it enough, but you need to understand this. You're climbing up a greased pole, right? You need to own assets. You need to. Stop saving cash. Cash is trash. Robert Kiyosaki, I like his take on that, even though I think he's misses on certain things. But generally, his mantra is right. Stop saving cash. Start getting assets. Assets that don't just buy anything. They've got to be valuable for perhaps intrinsic reasons or trending reasons. But what's taking place, so they're going to continue to print money, but what's taking place is a whole rejuvenation, I believe, of the debt system that may actually save off a debt crisis. And in doing that, actually see a kind of golden age through the kind of metamorphosis of debt once again. We're losing people. Let's dive into this clip of a panel that was headed by Charles Hoskinson, because it's interesting. It talks about what World Liberty's USD1 is doing, but this is the broader trend, and the Genius Act is yet to pass the stablecoin legislation. Let's dive into this.
Well, that's pretty cool. Yeah, and we'll get to World Liberty now, and that's... So let's start with USD1. Zach, I guess there's multiple Zachs. You're Zach 1, I remember, right? And you're
Zach 1.
All right, Zach won. All right, so Zach
It's
won.
interchangeable.
Speaking of one, USD one. So what is USD one? What's the value proposition? Let's kind of walk through what you're bringing to the market that's unique and new.
Yeah, so I mean, I guess just to sort of bring up a perfect example of what USD1's mission is take our, the recent transaction that MGX took $2 billion and invested it into Binance, right? Had that transaction not settled in USD1, MGX was likely going to use some sort of foreign currency, likely UAE dirham, maybe Chinese yuan, and by them taking that currency, converting it into USD1, we've inherently we've increased demand for the U.S. Treasury, in a place where they probably weren't going to use it otherwise, right? And you sort of zoom out from a retail level. Eric was, sort of touching on it earlier. And there are all these countries where, financial freedoms are restricted, or, it costs them 5 to 9% to get their hands on US dollars. And to us, that's unacceptable. Using USD1, right, there's very minimal fees. It's 24/7. There are no banking hours. And we think, that's doing a huge service, not only for our country by increasing access and demand for the US Treasury, but ultimately the world. Because like Eric said, there's a huge demand out there for US dollars.
This is the trend. I'm actually positioned, my crypto portfolio is very much centered around the kind of philosopher's stone that is stablecoins that they're introducing to the debt markets. Because what we've got is an ever-increasing debt supply and monetary supply, which is why you should own assets. The emperor, or people are kind of realizing that the emperor's naked in the sense that nobody really wants to buy debt anymore. Even when we saw all the fears around what Trump was doing, people weren't touching debt, which is unusual. Typically, debt's a safe haven. The 60-40 portfolio split, 60% equity, 40% debt, most big asset managers are now changing. So there needs to be an introduction into the very thing that is suffering that money is, essentially it's debt. And stablecoins are going to do exactly that. So despite people calling for a debt crisis, and I can see it, I think it could happen, I actually think they're going to stave off and use and utilize stablecoins. And I think with that, there's a major opportunity. And I've gone a very long way around all of that, but it kind of filters into Brent Johnson's milkshake theory. And I think what I should do just to finish things off is just talk about the markets. Markets pulling back a little bit. Bitcoin's been such a great chart for us. We did highlight this falling wedge and said it was very likely you were going to break out and retrace the move. We've done that. You've just run into resistance. I do think eventually you push straight through it. You might be setting up some sort of potential head and shoulders, inverse head and shoulders here. Could be a scenario to watch for. A little small right shoulder. Could be a bit of a squeeze taking place here and you push straight through. So we shall see. Don't get bogged down with the day-to-day cryptocurrency price action. This industry is truly going to change the entire world of finance. It's going to revolutionize money itself. It's going to be the new plumbing and the new rails for a global system. There's negatives to that. There's positives. One big sort of thing, we cover so much on this channel, including news, and we've kind of stayed away from a lot of the news, barring maybe a little bit of what came out of consensus. One big thing you need to pay attention to is that the monetary system itself is struggling. They need to adopt crypto to do so. That equals a major opportunity. And just as a general note, you should all be investing in assets. I'm a crypto guy. I also own other assets. In the Patreon, we're looking at more stocks. Quantum computing is an interesting place, so on and so forth. But understand that if you just saving cash and you've just got wage to wage and stuff like that, you are sliding down a greased pole, not climbing up it. Whereas if you own assets, you've essentially got people pushing you up that pole in the form of assets. If that all makes sense. That's it from me, guys. I'm going to love and leave you. Have a smashing Saturday. I hope that did make sense. And I'll see you all in the next one. Thanks for watching, guys. See you soon.